What is up, everybody? Today I'm going to be doing a very quick dive into Golf Lima, Globe Life Incorporated. Fuzzy Panda came out short on this name today. Otherwise, I really had no familiarity with this name. I don't know if I've ever traded it, and I can't look anymore, so who knows. But what happened was pre-market, Fuzzy Panda comes out short. Fuzzy Panda Research is a short seller, kind of like Citron or Prescience Point or any of those other guys that just sometimes put out these hit pieces on stocks. Decent reputability. I don't think they're kind of the king, like say like a Muddy Waters or someone, but definitely there's someone that's had a history of these. If you've not really documented these before, that's a good project. Congrats. You now have homework. Worth going back and evernoting and writing up all their past shorts, going through some of the other famous short sellers and doing that as well. So anywho, this stock gets pretty dinged pre-market. We're opening down close to 10 points. What's so notable is this is a NYSE stock, and this actually had a delayed open. What happens with the delayed open is generally there's just such a large imbalance that it doesn't really open right at 9:30. And that's why you can even notice the volume in this second bar being so much bigger than the 9:30 bar. So nothing so huge about that, but just that's generally a good sign that like, something's amiss. Why the hell is there such a large sell off the open? The stock then trends lower. We do kind of make a right side of the V play. And already for a short report, like that's actually a really, really big move. Obviously not with what happens later in the day, but I actually don't think there's anything wrong with buying that break of prior bar highs. So I actually think buying that turn, again, as people know, I use 2-minute bars, yada, yada, yada. We have pretty huge volume capitulation. We have a turn, and that's actually a totally great play to use a trailing stop. And, you get in 86, whatever, and you get out kind of a little above 90. That's like a super solid trade. You've got defined risk. I don't love it. I don't think it's super amazing, but I do think that's like a solid little layup trade. What's so interesting though is you always want to set an alert at lows of the day or highs of the day. Anything with a news catalyst or anything that makes some big move, anything on my watch list, I am always setting alerts at the highs or the lows of the day. I am also using, I used to use like 100 share alerts. Just so I can kind of, I don't mind 100 shares. It just allows me to see it. So anywho, this stock ends up going close to lows later in the day, and then we roll over. We break below 84-ish. We're not particularly clean anywhere, but what we do is we start holding that moving average. These are just Bollinger Bands. And this is just so essentially 20-period moving average, simple moving average. We start to roll over. One thing that's worth noting is this volume is super steady and consistent. Very, very steady. The volume this thing is doing is super nuts. And keep in mind, this is a news catalyst. Whether you want to believe the short report or not, news, at least to me, is fairly binary. And there's a catalyst out. So if this breaks the lows, I want to be thinking short. I don't particularly love the setup. Like, I don't mind shorting a little bit with the loose stop. Generally, I don't really capture these moves. Like I know this kind of melted from 85 way lower. I tend to not really be super good at catching that. Like for me, if I do short, I just, for whatever reason, I never tend to give it a wider out. I tend to really just catch very specific legs. But when I talk about reverse engineering, I really think what you can do with some of this stuff is look back and say like, okay, what were the signs? Really high volume staying steady. And so you can take a mental note that this held the moving average for a very long time. And now you might say, Lance, that's hindsight. And you're dead right. It is hindsight. But as far as reverse engineering plays, I do want to note that. And maybe if I go back to my database, maybe I find that once these things get going, some of these big picture moves do hold that moving average. So it might be statistically significant nevertheless, but that's where you use data to test your hypothesis. So what ends up happening is we have so many down bars in a row, down, 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 and down, and down. Then we finally, I would say, so I never want to be long against that trend. This is just way too steady. We're not even below the lower Bollinger. The slope is essentially -1. We start to increase, but it's not until 62 and that bar where we halt lower limit that I would say we're actually starting to capitulate. The volume's really increasing. The bars are starting to increase. Oh, crap, I just lost it. So the issue here, though, is that these bars, like this 1342 and this 1346, these aren't increasing in size. So this does finally turn. I don't think there's anything wrong. It's not so awful to buy that turn, but like I'm not so surprised that this doesn't end up going. Just because these couple bars weren't really expanding in size. And yes, I know there's halts involved. Like nevertheless, it's not expanding in range. The volumes weren't too impressive and stuff. I don't mind potentially, like if I miss this turn, I don't mind potentially rebuying some in here or rebidding a little against these lows. I don't love it, but I don't mind it. This is a pretty massive move. And generally these things like, you know, the market's fairly efficient. I'd say for the most part, most short reports are not spot on correct. Like the amount of times where a stock is just totally taken to the woodshed and the Grim Reaper and it's dead in 2 days, very, very unlikely. Maybe like a couple a decade. So anywho, this fails to bounce. We kind of double top at around 62.50. We then kind of make a lower high. So this roll right here, below 55 at those lows, I actually think this was probably the second best setup of the day. I know you might say, Lance, but you missed the whole move from 80 to 55. Yeah, I just don't, that's not what I tend to catch with my system. I'm sure there's some trader out there that's able to super epic crush that and saw this coming. For me and my skill set, that's just not my expertise. But what I do love is this 55 break. Because now the stock's already proven like, oh my God, we're in panic mode. We go from essentially 105 pre-market in the prior day all the way down to 55 and we can't even bounce, right? We fell 50 points and the most we can bounce is like 7. You know, that is like a 15% bounce. That's not good. That's not what you want to see if base case is a 50% retracement. So sure enough, the bars really, really tighten up going into that $55 support. When we break that support, that for me and my system is a short. You got a news catalyst. This thing didn't really capitulate here. We can't bounce. And so the nice part though is the way these bars set up is your risk is really fairly defined. Again, I tend to use prior bar highs. You can use whatever. But when this can't bounce after such a big move like that, that's when this really has capitulation potential. So truth be told, as many people know, I don't really tend to trade that much at all anymore. I sell little options, but I don't think I've traded much since SMCI for the most part, but so didn't have much going on today. So let's see. But I did actually trade this, and I ended up hopping on a call some SMB guys, and so they can also confirm that I traded this. I'm not bullshitting. But anywho, I did take like a little stab on this turn when we weren't able to bounce. You know, I was out a little bit here. Then at 55, if you're long anything, you need to get out at 55. I would argue you want to flip short here. So I did flip short for a little size, nothing crazy. For the most part, I was more interested in this capitulating and getting long just because so often these tend to have mega bounces. You know, it's like a $10 billion company. $10 billion company, multiple analysts out there. Markets are pretty efficient. I tend to, when these mega capitulate, the data, again, if you guys do these analyses, you'll find that the data really favors a bounce post capitulation. And so sure enough, again, I use prior bars. So this short actually worked out really well. But here's the thing. We finally start to really make a move. Once we gap to this 45 and go lower, now we're really, really talking. So the beautiful part with longs is as this goes down, you can only lose some maximum amount. It's way safer than shorts. Like SMCI is way scarier as far as a risk perspective than this. And even if this thing is like the worst piece of shit on earth, this stuff doesn't really go to zero overnight. There's still going to be pretty much a market and debate, and even the allegations weren't like, oh my God, this company is a total fraud, zero, whatever, blah, blah, blah. So once we start really, really going from when we were started sticking the lower, like at this 41, whatever, I just flipped long there. For pretty big size. My short was not big. So already at this lower limit, I wanted to just start to have size because the reward is so big at that point. So here's the thing. Like this prior range, this prior price acceptance is at $60. I'm now buying it $41. That's 20 points away. And the odds of this ever getting to 20 or staying there, in my mind, in one day are near zero. The odds are so favored that you're going to see 50 plus, or even maybe 55, 60 plus, way, way, way before you ever lose that amount. So that lower limit, again, I don't actually normally tend to want to buy on the lower limits, but this was so juicy enough to me that I didn't want this to get away from me. So I probably got I ended up getting a lot of size in this. I know people will call bullshit, whatever, don't care. But so I probably bought 25,000 here. And then I had a large bid at 39.10, which I didn't get fully filled, but I was willing to start to pyramid into this pretty large. Again, mostly because I have the data on this, and I have the strong belief that this isn't really, going to zero anytime soon, and that the data on these are pretty good. And now that we're really mega capitulating, the volume was insane on these bars. So I was really, really into this. So one thing that's worth talking about, and the power of trading in pods, so I was on the call with some of the SMB guys, and we were, they were talking about size and stuff, and I try not to interfere too much. People need to do their own thing. People need to learn, and I'm not there to kind of, I want to nudge people, but I want people to ultimately learn from their own stuff. But when they were talking about their sizing as this is going on. Oh, so one other thing before I forget, any single time a stock gets halted, you have, volatility halt, you generally have 5 minutes. Do not waste that time. Never, ever, ever waste a volatility halt. You need to use those productively to game plan. Where do you want stock? What is your, where's the trend? What indicators are you looking for? You really want to always think, what size do I want in certain places? Do not ever waste a volatility halt. That is the one thing when I was running an office, look, love me or hate me, I was a strict boss. And some people hated that, but we ran a tight ship and we were a cohesive, efficient team. And we frickin' performed really well as a result of that. And so every halt, we were always game planning. No one was fooling around. No one was like, oh my God, I can't believe this is doing this. We were just simply saying, what's the plan? What do we think? What are we looking for? How much size do we want? Ultra focused. And so this was something I was very, very comfortable going very big in. And so some of the guys on the SMB call, they were talking about their size. And in my view, look, I don't think this is the greatest op ever, but I do think I knew in the moment this was going to be a top op of the month. And this being a second leg with that volume, I was like, hey guys, how much are you guys really risking? I think you're undersizing this. And, during those halts, I kind of convinced them that they were. And as a result, we all were able to do better. So, yeah, that was a point I wanted to make. And so the other thing, too, of a reason why I was willing to get size on the downside, which I normally don't want to do, is just because this is so much gap risk. I was really scared that this would halt limit up. and then I wouldn't be able to get the stock I want. Like, it wouldn't have surprised me if this halted limit up, then you open like 46 or 48 or something, and maybe this really bounces well. So I ended up getting up to, I didn't get fully filled at the low, but then, and so one thing is I'll definitely use stop orders. Like if there's something that I really think is going to create that momentous that turn to the limit up, I will have stop orders in. So I don't remember exactly where I put the stop. But I really, once I couldn't get filled at 39 and we immediately shot back up to like 41-ish, I think I had my stop at like, maybe like 42 up to maybe it was 41 up to the upper limit. I don't really remember. But I ended up getting pretty large size, whatever I could. And so I ended up between it all getting up to maybe like, 60, 70,000 shares, which that sounds like a lot and obviously is for most people, not recommended. But for me, I just felt at $40, the probability that this actually sticks the landing and settles in sub 30 seemed so low. Again, this is backed on data. I've recorded these for a zillion years. And the odds are very asymmetric. Like I'm thinking, how am I going to lose 10 points? Seems improbable when literally 10 minutes later, I'm up 10 points. So let's see. I normally do 2-minute bar lows. So this ends up taking me for some. Obviously, you can't get out of this position, nor did I want to. I really was thinking big picture. And so even during the call when I was talking to some of the guys, I'm like, guys, you need to think of the big perspective. Some of these guys are like, oh man, should I get out of some at like 45, 46, 47? I'm like, guys, the stock literally came from like frickin' 105. Like an hour ago, the stock was at $80. You don't need to be eager to sell. It's actually a shame that this was so close to the close, but I'll get to that later. But anywho, I did take some off at prior bar lows. I probably sold, I probably sold 10 to 20-ish, up by 50. And what's so interesting is we break prior bar lows and then we just don't go down anywhere. And that's exactly what I wanted to see. I wanted to see us break this moving average that it had kind of been holding. And so then for a 10-point bounce, 10-point plus bounce, we really are not pulling back at all. So that was really bullish to me. I ended up selling a pretty good chunk into the close just because I don't love having a ton of overnight risk where it's going to just affect my sleep and everything else. But a good chunk I also wanted to hold on to. Why is that? Sure enough, like this ends up getting a rebuttal. Not even a good rebuttal. This was a shitty rebuttal after hours. And sure enough, like we curled up all the way to 58. So I was able to sell another chunk into that. Right now, I don't have huge size on left, maybe 15-ish. Let me see if there's any other points I want to bring up from notes. Oh, so here we go. A couple people asked about halt risk. And so my analogy I gave is this is not that dissimilar from WAL, where so many people are like, oh my God, halt risk, blah, 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 blah. But again, you need to work that into your expected value equation, right? Is the trade still worth it? So now here's something to keep in mind. Like, for the most part, I never had that much meaningful size all in through here. And like, if I'm long, odds are this gets a rebuttal, right? Like, you definitely want to be probably positioned long into any halt because odds are it's really just going to be halted for that rebuttal. So that does make the short potentially scary. But now think about this. How many minutes was I actually short, right? This is 1440. I'm out by 1458 or so. So I'm holding this position for 18 minutes. The day is a long trading day. Yes, this can get halted, but the odds of that being halted for those specific 18 minutes are very, very low. And even if it does get halted, will it even be a good rebuttal? Will people believe it? And like some people on Twitter were like, oh my God, what if they rebutted it and it just goes all the way back up? Yeah, again, you're only saying that because you haven't done the work. Like, you literally are saying that based on 0 data points. That never, ever, ever, ever happens in the history of these ever. Like, most rebuttals are just so par for the course where they barely move the stock. In fact, when they did give their press release later in the day, like, it went up like a point. It barely moved 2 points or whatever. So again, it's like people use their lack of preparation to just ignorantly ruin their expected value. Like you can't just make things up and be like, oh my God, if this gets rebutted, it's going up 100, all the way back. Again, that's the importance of doing the hard work. That's the importance of having the database. It's just so important to be informed in this job. And that comes from experience, and that comes from doing the work. So no, I didn't view the halt risk on the short side affecting me that much or being that likely. That on the long side, at post capitulation, if anything, it's probably just going to help me. So I thought that was important to add. The other thing too, by the way, is like this final volume was just amazing. You can note that the bottom was actually the top tick volume. That's a really good sign. And just think about it. Like, the stock was $105. A lot of meat on the bone. I think that kind of covers all my points. But I would say, if this had more time in the day, I do really, really strongly feel that this would have probably kept on bouncing amazing. I think 60 probably would have been no problem. When this holds up so well, I don't think there's, if you miss some of this stuff or you're scared of this stuff, I don't think there's anything wrong with buying in here and giving a little bit looser. For what it's worth, like, yeah, I don't know. Like, a lot of my ability to trade this so big and so well is simply because I've had 10 plus years of data on this. I've traded 10 plus years of short reports. I've seen all the ones of these that have imploded. And then you have comparables. It's like Neil did a good job on Twitter of, highlighting how this setup here where we can't bounce after a big move is similar to what Silicon Valley Bank did during the crisis. There's a zillion other short reports that have made huge moves. I know what those setups look like. I know what those bounces look like. I know what the capitulations look like. I know what the stats are for this to then have a meaningful bounce. Yada, yada, yada. And again, like, it's me having done my homework. It's me having, I wouldn't say I utilized a pod so much, but it was good on the other. Oh, that's one other thing. So one thing that's super important, especially if you are trading on a pod, whenever a trade's going on, you never ever want to lose focus. Like so often we might miss a trade and then we start cursing like, oh damn, like, oh man, I missed that turn, or oh crap this, or oh man, like this distracted me, or oh, I wish I got the short. You really don't want to lose focus. Like, until the bell rings, and not even, like, your job is to focus and trade and perform. The game's not over until you log out for the day. And you really want to stay focused in these moments. What is the box showing you? Are there any real buyers? Are there any real sellers? How good is this bounce? Is this going to set up? What would this need for you to want to play a continuation play? So during these halts and when this stuff is moving, like, always stay focused. Don't take your eyes off this stuff. Set the alerts. Stay in the game. And I think just hold each other accountable to that practice, and it will help your trading so much. If you haven't been diligent in documenting these things, hey, the best time to start was probably 10 years ago. The next best time to start, if you haven't done anything, is tomorrow. I think that's what the saying is. Hope this helped. Feel free to shout at me some questions. I do think this will be interesting to watch tomorrow. Yeah, hope that helps. Thanks, guys.